Hello, I'm James Yardley. I'm the Senior Research Analyst at Chelsea Financial Services. I'm joined today by George Cooke from the Montanaro European Income Fund. Thank you for joining us, George.
Thanks very much.
Our investors aren't that familiar with Montanaro. You've been around for a while, but you're quite new to the retail space. So can you introduce your company and tell us what your philosophy is and so forth?
Certainly. So Montanaro was established in 1991 by Charles Montanaro, who remains the executive chairman of the business. We now run around £2 billion in assets under management, and we think we've got the largest team that focuses exclusively on small and medium-sized companies in Europe and the UK. Our investment philosophy, in basic terms, we look to buy high-quality, growing companies at reasonable valuations and hold them for the long term.
And why should investors consider small and mid-cap European stocks for income?
Well, I think the main reason investors should invest in smaller companies is that historically they've delivered higher returns. So to put some numbers around that, in Europe, if we go back to 2000, smaller companies have delivered on average about 6.5% per year higher returns than larger companies. They've done that because the earnings have grown faster. It's easier for a smaller company to grow than it is for a larger one. And of course, with faster earnings growth comes faster dividend per share growth. Also, smaller companies, they're a great hunting ground for the active investor. So we have a huge choice, many hundreds of companies that we can pick from, and a lot of them are under research. So some have no analyst coverage, for example, so we can add value. And then finally, there's a diversification argument as well. So while a large company fund or large company funds may have to buy some of the same stocks because they have a limited choice, we don't have a limited choice, we've got a massive choice, which means we can assemble an array of different companies and make a truly unique portfolio. We also think that the European Income Fund that we manage is unique in that it is the only fund which focuses on small and mid-cap European companies with an income mandate.
So the big news at the moment is obviously Brexit. So what impact is that going to have on European company dividends and particularly smaller European companies?
We don't think it's going to have a major impact at all, actually. And if we look at the companies in our portfolio, for example, around 5% on average of their sales go to the UK. So in fact, it's much more important that Europe continues to slowly recover and that the US retains some of its strength. Both of those things do seem to be happening. We of course speak to our companies and look at their results, and even since Brexit, both of those sort of points of information would back up our view that certainly, at least in the short term, really it's borderline irrelevance for the companies. I think the last point to note, of course, is that for a UK investor, investing in European companies has actually been beneficial, not least from the currency impact that there's been. So investors in the European Income Fund have, over the last year to the end of June, so incorporating the time when Brexit was announced, have received about a 20% total return after fees in sterling terms. So overall, we're quite comfortable with the outlook and reasonably positive.
Great. Thank you very much for joining us, George.
Thank you.